Welcome to this guide on understanding Binance fees and minimizing trading costs. Binance charges various fees for different activities, including trading, depositing, and withdrawing funds. Holding Binance Coin, BNB, can significantly reduce your trading fees, with higher BNB holdings leading to lower fees. Maker orders, which add liquidity to the order book, are charged lower fees than taker orders, which remove liquidity. Spot trading on Binance can be more cost-effective for lower trading volumes, while futures trading offers lower fees but comes with additional complexities and risks. Effective risk management, including setting stop-loss orders and diversifying portfolios, is crucial to minimize losses and maximize profits. By understanding Binance's fee structure and implementing cost-saving strategies, traders can maximize their profits. Utilizing Binance Coin, BNB, and Maker orders can significantly reduce trading fees on the platform. Choosing between spot and futures trading depends on individual trading volume and risk tolerance. Staying informed about market trends and managing risk effectively is essential for successful trading on Binance. Binance offers various tools and features to help traders minimize costs and optimize their trading strategies. Continuously educating oneself and adapting to market changes is key to long-term success in cryptocurrency trading. To start trading on Binance and take advantage of these cost-saving strategies, click the link below.